Hi guys, I'm Karunya Rao, and on Ideas for Profit, we take a quick look at how India's listed wealth management players stack up against one another and which stock should you bet on. Starting with IIFL Wealth, which reported strong earnings for the quarter gone by, with net profit rising by 34% year-on-year. While the overall asset growth was adversely impacted by mark-to-market losses, net inflows continued to be positive in a volatile market. The newly listed mutual fund distributor Prudent Corporate Advisory, on the other hand, saw net profit rise 25% YOY on back of strong growth in AUM and an improvement in product mix. The significant growth in AUM was due to acquisition of the entire MF AUM of around 8,000 crores of Karvi in November 21. On a sequential basis, AUM declined due to MTM loss. That said, the organic growth was also healthy with net sales of 1475 crores in Q1 FY23. In June, it garnered 431 crores through SIP, which if sustained should lead to flows of around 5,000 crores in FY23. Now on to the big question. Why look at wealth firms whose asset growth fluctuates with volatility in equity markets? The number one reason being recurring revenue model. Wealth firms typically earn commission in the form of steady trail income, which is a recurring periodic payment for the assets in their books. Since the revenues are recurring, there is high visibility and stability even during uncertain times. In case of IIFL Wealth, management strategy has been to focus on increasing the share of annual recurring revenue as opposed to brokerage revenue, and that has helped reduce the volatility in the overall revenue picture. The recurring AUM share in total AUM has increased to 57% in Q1 FY23 from 50% in Q1 FY22. Consequently, the share of ARR in overall revenue stood has also improved. And the company is well on track to reach 80% levels in FY24. In case of Prudent, while it also distributes other financial products ranging from insurance to fixed deposits, mutual fund is the key segment that contributed around 88% of its revenue in Q1. Around 94% of its revenue is recurring. Most importantly, around 93% of the AUM is equity-oriented, which earns relatively high commission income. Also, the inflow through SIP is sticky and forms 42% of Prudent's equity AUM at the end of FY22 and lends continuity to asset growth. Management guidance is encouraging for both these firms. While IIFL Wealth's net flow in Q1 FY23 was muted at 6,078 crores, the company maintained net flow guidance at 35,000 to 40,000 crores for FY23. Though this seems a tall order, IIFL Wealth has delivered on past guidance in time. For instance, management had earlier guided to improve cost-to-income ratio to 45% in FY23 from over 50% in FY22. Progress on cost front was seen in Q1 earnings. In case of Prudent, while there is no specific guidance, management stated that they aim to reach 1 lakh crore AUM in the next 4 years, which translates to 21% CAGR over the next 4 years. Prudent aims to achieve this through both organic as well as inorganic growth. It has recently announced inorganic expansion by acquiring mutual fund AUM of distributor iFast Financial India. While management guidance is encouraging, investors should note that the wealth firm's revenue is exposed to fluctuations in the capital markets and any regulatory changes. Wealth management opportunity is huge and likely to grow in sync with India's economic growth and rising income levels. We see wealth businesses on a sustained growth path driven by rising millionaires seeking wealth advice. Prudent, being one of the top 3 non-bank MF distributors in terms of average AUM in FY21, will be the key beneficiary of the structural growth in the mutual fund industry. The company's financials are healthy and the promoter has vast experience in the capital market-related business. Among other listed wealth firms, ICICI Securities is a larger MF distributor than Prudent in terms of MF AUM and commission earned from distribution of MFs. But the drawback is that ICICI Securities is not a pure-play distribution business, as broking contributes a big chunk of its revenue and investment banking is also part of the business. Anand Rathi Wealth is also a mass-market wealth firm, but MF distribution constituted around 33% of the total revenue in Q1. The major revenue was contributed by sale of market-linked debentures. In comparison, Prudent is a simpler and stronger business and a better proxy play for the growth of mutual fund industry. Earnings are likely to be strong for both Prudent as well as IIFL Wealth in the near to medium term, which along with valuation re-rating will drive the stock upside for both these firms. Being an asset-light business, both these firms generate high ROE and the large retail customer base also provides cross-selling opportunities. Annuity kind of business with high operating leverage and strong cash flows makes them a unique proposition in the current challenging environment. Investors seeking to play the theme of rising financialization of savings should consider adding IIFL Wealth as well as Prudent to their portfolio.